Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Enlightened investors, happy to be back with you again today. I'm your host, Dr. Alan. Today, we explore the perfect triangle and discover from a master real estate investor how we can navigate the waters of the next recession and come out swimming on top. Are you perhaps a busy professional, passionate about the work of your calling, but have come to realize that the hope of developing financial independence has taken a backseat to priorities of following your passion? If you can identify with this, I have good news. Steed Doctor Capital is an investment company designed for passionate, fulfilled professionals like you to help you develop financial independence built on solid, passive real estate investments. Go to our website, steedtucker.com, and enroll in Enlightened Investor Circle. There you'll receive education and support for your financial independence goals, no matter what your level of investment experience and expertise. Our guest, a 3-time best-selling author, Chris Prefontaine, having been through several real estate cycles, understands the challenges of real estate investing and is ready to give us clarity on how we can successfully navigate the constantly changing real estate investment environment. Chris, before we dive into real estate investing, share with us a memorable experience from your formative years that helped you to be the person you are today.
You know, Dr. Allen, I could go so many areas of this, but I'll say that the word exposure comes to mind. My dad was an entrepreneur and he hung out with entrepreneurs and they dabbled, because they all had main businesses, they dabbled in real estate. So I was exposed to that. And so people say, oh, how far back did that go? I mean, I'm talking 5 years old to 12 years old. That's what I saw. And so perhaps that's why I'm here. I would think that had a lot to do with it. I think exposure is everything all throughout life, but that certainly directed me, directly and indirectly.
Well, Chris, I am very curious about the perfect triangle. What is the perfect triangle?
So a couple of things there. At the beginning of COVID, back a little bit more than a year ago, as you know, I started talking about that. And it is simply, if I was to draw it for you, one side of the triangle is being part of a movement. It doesn't have to be real estate. In this case, it is. The second part is a movement that can change lives, including your own. And third, obviously, a financial component, because if you're affecting lives, then you usually get paid very, very well to do that. And so we've got an interesting thing going on since COVID started. We were very successful growing head over heels, but COVID actually 3 times that because of the nature of our transactions. So it truly is being part of the movement, really helping people that need a guide, buyers and sellers that need a guide during this craziness, and then getting paid well to do it. I think in any business, we get paid directly related, or proportionate, I should say, to how many people we can help, right? So that's what that perfect triangle is all about.
Well, very good. So what are your best suggestions for navigating the current of today's chaotic financial and economic waters? There is just so much going on, and it's been good, really, for most real estate investors, but there's just so many questions out there. So what are your best suggestions for navigating these current economic times?
Sure. There are a whole bunch. And mine, obviously, Dr. Allen's going to be somewhat biased because of what I do, right? But let me back up a little bit in the story why I say that. We buy and sell on terms. It's what we do. We don't use banks. We don't sign personally on loans. And why is that? It's because in the last crash in 2008, I got beat up and had to re-engineer everything. So I learned the hard way. But when we rebuilt the model, when we re-engineered the model, we said, okay, let's do it so that, yes, we never sign personally. Yes, we never go to banks, but let's also do it so that the model can weather any economic cycles and be as recession resistant. I'll never say proof, but be as recession resistant as we possibly can set up, and to kind of thrive, not weather storms, but thrive. And then COVID, obviously nobody expected. And when that hit, again, we thrived. So, and here we are in a red hot market, and people say, well, how would you be able to buy and sell on terms? We're doing it now. And then when the market goes down, we're still going to be doing it. So it is by far, in my opinion, the best way to buy and sell if you're looking for some sort of protection and some boundaries, if that makes sense.
Well, since you brought up the term buy on terms, tell us what that is exactly and how that works within your business model.
Sure. So terms for us means three things. And then there's a kind of a niche within a niche there too that I'll explain. One is terms being lease purchase, owner financing, or subject to purchasing. So within the owner financing realm, we do niche down one more level, and that is we deal with sellers who are free and clear primarily. They don't own anything. It's not about having a problem, right? Some of the other niches are, but this is about getting them to their ultimate goal by way of price or estate planning or taxes, because they're free and clear. And so we structure some phenomenal deals with them. But on all three of those, back to your question about the best kind of ways to navigate right now, on all three of those, if we have a long enough term, I don't care about the economy doing this, and I don't care about price as much, within reason, because we do have so much time.
So the free and clear, that usually works with lease purchase or owner financing. Is that correct?
You can work with either or, but when they're free and clear, my goal is ultimately owner financing. And the reason is, if you are selling, you have no debt on the property, like my office building. I'm not in it today, I'm at home. But my office building was bought on terms. And it was bought by structuring monthly principal payments. It's a huge issue. You got a market that's doing this, yet all of my monthly payments are going to principal. It's a big, big hedge against anything that can happen. That's why I like free and clear. I have the ability to structure almost anything I want with the seller, as long as it's a win-win.
Okay. So do you prefer the lease purchase or the owner financing? Or does it just depend on the deal?
It depends on the deal. But if you said, what's your favorite? By far, owner financing in subject to, because I can put on a subject to property where I'm buying the property subject to their existing financing staying in place. There's no end date when I buy that. I don't have a clock ticking. On owner financing, I can push it up far enough so I don't worry about a clock ticking, 10 years, 20 years. My building's 20. On a lease purchase, I'm usually with the seller, got a clock ticking, 3 years, 5 years, where I have to make sure I can exit out of that with my buyers who need time. So they're all different. The deal will dictate where I go with it. But if you said, would you like 10 of the owner financing or 10 lease purchase? 10 free and clear owner financing. They're usually six-figure deals.
Well, can you give us an illustration as to how you would structure an owner financing? And, well, there's probably a lot of free and clear people who aren't going to be interested in owner financing. So what is the ideal seller, and how are you going to structure an owner financing deal?
Yeah. So when you say there might not be many, that's what a lot of people think. So we do about 25 or 30 of these deals a month around US. That about a third of them are owner financing. Why? Most owner financing people, now then I'll go into a structure. Most of them care about price more than they do term. So my building was a great example. It was on for $550. The market wasn't giving him that for whatever reason. This is a savvy real estate investor, by the way, Dr. Allen. He's one of the largest landowners around here. So he knows math very well. He knows deal structure very well. Why did he do it? I mean, everybody in the area said, you can't do owner financing on this island. It's a very hot island. Why did he do it? He wanted the best price. The market wasn't giving it to him. He didn't care if he waited on his money, and he wanted to put over time for tax reasons and estate reasons. He's 70 years old, yet he gave me a 20-year no. He wants it to be in the family for his son. So there's all kinds of other reasons versus just, I don't think I want to do owner financing. Many of them do. It's a great pond to fish in, more so than the other properties, believe it or not. I love them.
We'll be right back after a word from our sponsor. As an industry-leading, relationship-focused, design-build construction firm, Mosaic Construction has worked in many different asset classes from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145, or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn. So in terms of marketing, does it take really a great deal of marketing to find those who are willing to do this? Or do you find that there really truly are a lot of people who are willing to do this? Perhaps they just don't know they're willing to do it.
Yes, I'm unaware. Good point to the end of that. But to the beginning of the question, about a third of the properties, roughly, in the United States are free and clear. That's a big pool to fish in. You don't need many when you're talking about creating the income we do in these things. And as far as marketing, we don't do any heavy mailings or anything like that. What we do is we have virtual assistants who call on expired listings, properties that didn't sell with realtors, and for sale by owner properties, as well as for rent by owner, especially during COVID. You got some tired landlords in there, and a lot of those are debt free. So we have them calling those types of leads. Now in a hot market, which most of our students are in, all over the country, we do some very limited postcard mailings. I'm talking the hundreds per month being spent versus tens of thousands. And so we might target free and clear, or we might target free and clear out of state, knowing that COVID has affected some people's mentality with that. But it's small marketing, to the tune of maybe $200-300 a month. The virtual assistants cost about the same, so I'd rather have people calling.
So $200 to $300 a month in your marketing costs, whether it's mailing or virtual assistants who are calling. So you say that's about the same either way. So I'm assuming your virtual assistants are probably out of the country. Is that correct?
Some are, some aren't. I've had one gentleman in the country since 2013, actually. He's done, I don't know how he does it. He's done tens of thousands of, if not hundreds of thousands of calls for us. That's all he does. We have some outside the country, but a lot of people think, okay, I'll go outside the country. I'll get someone for $5 or $6 an hour. Yeah, you might luck out on occasion, but we haven't had great luck training them at the level that we want them to be at. I'd rather pay the, probably double. And have someone I can have either in-house or trained locally, but they both work. I've seen success in both.
So you actually pay per hour on this?
Yeah, we pay per hour with some expectations. It's just like a team member. We'll say, hey, John, if you're going to be doing 5 hours for me, I expect about 2 leads per hour you work. So they're not just haphazardly down. They've got some expectations. That's one metric, but we give them some metrics to go by.
Well, interesting. So how long have you been doing this with the virtual assistants?
I've been at real estate 30 years, but I've been in with the terms niche specifically since 2013 because it took me 4 years to wind out of the mess from 2008, literally. And then beginning of 13 started the terms business, which took within the 4 years of winding out of the garbage, the mess. The last year or so was, okay, if I was going to enter real estate aggressively again, sort of what are going to be the rules, the box I operate in. And that's what we're doing now. So all the way since 2013, we've been using virtual assistants and laser focused on terms deals.
Mm-hmm. Well, interesting. So I'm assuming then that getting back to dealing with recessions, that you plan to continue this model because it's working for you, but we're not in a recession at the moment. We're in a really hot seller's market. I think I saw, if I remember this correctly, that in the last year, housing prices all over the country have increased 14%, which is just phenomenally crazy. But you really started this in 2013. We were still really in a recession, although a lot of people claim we came out of it in 2010, but sure didn't seem that way to me.
No.
So you really started this in a recession.
This niche, yeah.
Yeah. And so it is set up for recession. So I'm assuming that you are suggesting that the best way to deal with the recession is actually to continue this process of subject to owner financing, lease purchase, and your target market is probably going to continue to be the owner who is free and clear. So tell us, how do you really plan to deal with the next recession here, which who knows when that's coming, but it will.
Yeah, it's inevitable. So we started doing a bunch of the same things we would if it happened today, just pre-COVID, coincidentally, and that is pushing and helping our students push out the terms a lot longer. Because again, like my building, I honestly don't care if it drops if it dropped 200 grand, it would be almost a third of value, which would be pretty drastic, like back in 2008. And it wouldn't affect us because I've got the principal pay down working in my favor and I've got enough time. Now, When I started the terms business, Dr. Allen, I was doing more 3-4 year terms. That can be a little tight in a recession because you're trying now. Is that the end of the game? No, you can come back and everything's negotiable. All our contracts are set up to be flexible like that, but I'd rather have it so it's a win-win day one, and the expectations are set day one. And so we're going to continue to buy aggressively. In fact, we've just kind of doubled down now in light of what's going on. You've got millions of households that are going to need a guide when they can't pay those things that were kicked down the road for forbearance and whatnot. We're already getting them. People are already calling us and saying, I help me. I've had a 9-year run of appreciation. I'm about to lose my house. And so those are happening too. You get the free and clear, and then you get the opposite of the spectrum, those people there. So we plan on really honing in and helping them as well.
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolios selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
And I suppose you're going to help those with subject to, but how are you going to help them if the principal that they're paying is more than the house is worth? So how are you going to help those people?
So there's a fine line with how much. It's upside down. So back in 2013, I can think of 3 or 4 right now that I still have that were either break even in their mind or over leveraged in their, in reality. And so we put those on 10-year deals. So we're actually catching out of some of those now, and some of them are still going. So again, that was all time. Anyone would look at it back then and go, oh, that's crazy. Why would you even buy that? Because I had the time. I know if I have 10 years, I'm okay or more. Now, if somebody comes to us and they're subject to, and they say, I'm a year behind, I'm upside down, and there's no equity, there's no deal. There's only so many. We can do a lot of properties with the right terms, but we have gotten those. We have got people said, I'm a year, 2 years. I got a call that said I'm 2 years behind. And do you have any equity? No. Well, I can't make that up. There's no way of making that up because we don't like to come out of pocket with cash unless it's a big back end. Mm-hmm. So there's only so many of those we can do, but most of them aren't that. Most of them are, hey, I'm 4 to 6 grand behind. I just had one, $4,100 behind going through a divorce, not a friendly divorce. Both talked to us friendly. Both didn't want to talk to each other friendly. So we paid the $4,100, we bought it subject to the existing financing. They were tickled because it got rid of their headache, their financial, it stopped the bleeding and stopped the arguing. And then we went ahead and filled that right away. What I should have said is on the exit side, I keep saying these are lucrative. We've trademarked in the United States the 3 payday system. So when we put a buyer in that home who desperately needs our help, especially during COVID, even before, people who need time because they have a job change, people who need time because they have to improve credit, divorce, all these life events, those are great buyers right now if you pre-screen them correctly, because we sold the house right away to someone that put a nice deposit down. That's one of the 3 paydays. And so we help the sellers, big win-win. We help the buyers, big win-win. They thought they couldn't get in a home. And of course we benefited. So if you do it right, it's a 3-way win, which is nice, healthy.
So what are the 3 paydays?
Sure. So payday 1 is when that buyer who thought they could get financing can't today, but they're financeable in 2, 3, 4, 5 years with a plan. Payday 1 is their down payment. On that house I just said to you, it's about a $400,000 house. They put down $41,000. That's payday 1. It's non-refundable. That goes into the investor's pocket. That house there created a spread every month. I think our payment was about $1,800. I'm rounding. We get about $2,300 from them. It's about a $500 spread. That's payday 2 over the term, but $500 a month. And then payday 3 will be all of the principal pay down accrued and any markup that we did in the price when that eventually cashes out. Those 3 paydays for us, we're in the lower end of our student base, average around 75 grand. Still a great deal, but because you're talking about money now, money over time, and money down the road, that's any entrepreneur's perfect model. Our students go as low as 45,000 all 3 paydays, and as high as 250 and up. And those are like areas like DC, California. They're doing those monthly, those big deals.
I'm not quite grasping the down the road, that final payout. Where is that? Yeah. What is that coming from?
So, okay, the house I just gave you, the example of where we build out the couple, we bought it subject to. So we put a tenant, we call them tenant buyers. We put a buyer in there that needs time. Now we have 2 choices. The mortgage readiness underwriting we did to put them in there, because we don't put them in unless we're going to set them up to win. That said to us, they'll be ready in 29 months. Now, we have no end date with the seller. So we have 2 choices. Either in 29 months, they get a conventional loan and cash us out. There's our payday 3. Or, and this is the route we're going with this one, we don't have an end date. So we're going to turn around and owner finance them. They'll never have to go for financing. And now we have that deal for 20 years. So we either cash out in 29 months or we just stick with it for 15, 20, 30 years, whatever we want to put them in for, however long.
Okay. So they come in with a deposit. That is the first payday.
Right.
But that deposit is not the full amount of the value of the house in 4 to 5 years. Is that
right? We're trying to get them usually between 7 and 10%. If it's a jumbo, even higher, because we know that that's what they'll need when they go for underwriting eventually. Mm-hmm. So we usually get in that 7 to 10% range.
Okay. So that is just a deposit, and then that final payout is the value of the principal of the owner financing.
Correct.
Or the value of the house at the time that they cash
Plus
it
their
out.
payment, yeah.
Yeah. Okay. All righty. An interesting look at that. How many people are doing this? Roughly?
In our network, I mean, it's been done since I've read about this as far back as late 1800s. But as far as us creating the 3 payday system and really getting behind and helping people, we've got hundreds of students, but we've got about 120 around the country that we do deals with. We call those associates, the associate program, where we're literally in the trenches with them. We're helping with the sellers. We're helping with the buyers. So they get that interactive on-the-fly coaching in the trenches, and they learn it on the fly, not theory. And that means the headaches, the curveballs, the pivots, the wins, everything together.
Okay. So you are doing coaching, and so there's hundreds of students who are doing this, but you have a few hundred associates. So how does your associate program vary from your coaching program?
We don't coach. We have product that is like an online academy that lives and breathes and evolves with changes like COVID. And they can go through that. Anyone can go through that. And then they can go off and do deals on their own, in theory. The ones that want to get a little bit more aggressive and want that hands-on, we have the associate program. One of our missions with the company, Dr. Allen, is to do deals. So we don't have a program we just coach and consult. We only have the associate program where they can revenue share with us and learn on the fly. I just think that's the most direct route for anyone to do real estate deals. I've had numerous calls per week for the last 13 years saying, or whatever it's been, 12 years, saying, listen, I've done this many courses, 10, 15, 20. I've spent tens of thousands. I haven't done a deal yet. It's just unfathomable. So we're doing what I call bridging the gap, with the time from when someone does a course or a seminar and they then do a deal. And some people sadly don't get out of that gap. We're trying to bridge that, and we track what's called time to first deal. And it's all done because we're in the trenches, not here's the product, good luck, see you later, and they don't care what happens. Unfortunately, it's too much that happens.
It does. It happens. Yeah, I know. It's not infrequent. It happens all the time. And some people pay astronomical prices for these courses and still not doing any deals there.
I've had 2 students, and I'm sure there's more that won't tell me, maybe from embarrassment, but 2 right this second in our community who, when they came, they're doing deals now quite successfully. When they came, they spent 6 figures without doing a deal.
Enlightened investors will be right back after this important announcement. I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time.
Crazy.
That's unfortunate, but I'm sure it happens more frequently than what anybody knows. There are just so many quote gurus out there, and they just have
late night
these
TV.
yes, and they have phenomenal programs, and you're going to make millions and millions off of them.
They're great marketers, though.
Yes, they're truly, well, they're great at marketing their programs. I don't know how great they are at real estate, but I know they're good at marketing programs. Well, I have one more question before we get into our last segment here. So how does this type of program that you're doing, how does it differ from flipping, rehabbing, wholesaling, and even holding to rent?
Sure. So I've done all of those in my 30 years. So as a backdrop, the main thing is, there's a few in no particular order. The main one that comes to mind is 3 paydays. I've been a realtor, I've been flipping, I've done we've done everything. And it's good. Real estate's been great to us, but it's 1 payday typically. I build the house, I move it, and I get paid. So every January, what do? I got to go do that again. And I just remember that feeling every year of, okay, I got to go recreate it. To me, that feels more like a job now in hindsight. Whereas the 3 payday system allows you to get a spreadsheet and literally chart today money, overtime money, and longer term money, which all staggers and not the same dates. It's nice. Mm-hmm. That's number one. Number two, in doing that, you're not just getting your cash flow fixed and parlayed. You're putting some long-term wealth on the books, because different day, different segment, different seminar we can talk about. But I do what's called portfolio stacking, where once you have a bunch of these deals and you don't need the cash, quote unquote, you can now push some of these terms, like the deal I explained, way out 20, 30 years. And so now you're in a buy and hold, but you're not a landlord, because you have either a buyer in that home or a tenant buyer, both of which take care of the house and pay for it like they own it. And that's far different from being a landlord. So the last piece is that you mentioned flipping. Again, I've done it. It's just that with the advent of HGTV and all the cool shows that are out there, and some of them are fun and good, but that's caused a lot of demand and a lot of people, with a hammer and a pickup to go do these deals. And so the margins are very, very tight. I don't think you'll see people in that 45,000 to 250 range per house profit on those types of deals, or else I'd go do them. That's my unbiased kind of blunt answer.
Well, they're a lot of work too. And like you said, that margin is much smaller than what HGTV lets you in on. So, yeah. And it's not as much fun as it looks like. I've been there, done that too.
Yes, I agree.
Before we go into our last segment here, you have a lot of things to offer our viewers and listeners. So tell us how they can get in touch with you and how they can take advantage of not only the programs you have, but you have some free offerings out there that are very attractive. So tell us about that.
You know what I'll do? I'll do a few things. First of all, just to contact us at smartrealestatecoach.com. But if they want to get, I'm big on free, Dr. Allen, because there's a lot of niches. I'm not so naive to think that ours is the only one, right? So go do your free research, go to YouTube, go to these free areas. What I'd like to do for your audience is they can go to the free workshop. It's my son-in-law, Zach, and I. We're a family company. It's 35 minutes. It's free. You'll find that on the website, smartrealestatecoach.com. It might say webinar or workshop, but it's the same kind of class. That's number one. Number two, if anyone in your audience would like to do what we call a free strategy call, our strategy expert, Brian, and sometimes it's myself or Zach, we're very tight, just go to smartrealestatecoach.com/action. And this is a gentleman that came from 17 years of sales and no real estate experience, who made his way in this and then went full time. So he's a great guy to talk to. And then, of course, I would love to talk to you as well. So it's smartrealestatecoach.com/action.
Okay, very good. And like I said at the opening of the show, Chris is a 3-time bestseller author, and we have 2 of his books here.
Look at that. You got them.
We got 2 of them there. Real Estate on Your Terms and New Reels for Real Estate Investing. And so check both of these fine and excellent books out. Smart Real Estate Coaching. Yes, smartrealestatecoach.com. So check those out there. So, Chris, let's go into our last segment here. And the first question I want to ask you is, share with us one of your most difficult setbacks, and how did you come through that time, and what did you learn from that experience?
Most definitely the '08 crash. As I alluded to earlier, the biggest learning lessons were do not, under any circumstances, sign personally on bank loans. There is just no reason. We can show you other ways to get around that, because that'll be a nasty time for you. So that's the biggest lesson. The second lesson is if you're going to, I don't care what niche you attack in real estate, there's someone that already did it. Just go find them and follow them. If you can align with them from a value standpoint, maybe family, whatever it is important to you, and then put the blinders on for 36 months. Those things I learned coming out of the '08 crash, albeit it took me a lot of years to get to that point. That's what I learned out of that.
Well, tell us a little bit about those difficult times. You told us what to do to shield yourself during that time, but tell us about it. It must have been a difficult time for you.
Yeah, big time. So I know there's people out there, especially with COVID, who have had issues with debt and collectors and all that stuff. If you name it, I went through it. We had 23 properties that I was on personally. I had good credits. I figured, why not? That's how you buy conventionally. Despite with this niche being around since 1800s, I didn't know about all the pieces to it, just a little bit. And so when the market dove, in some of our markets, Dr. Allen, a third. Some of our markets on a condominium conversion in Providence, Rhode Island, 2/3. And so the banks came looking. So we either had to do a foreclosure, let it go, or do a workout, or keep it long-term, which was the case of 2 of them. So it was a lot of work. That's a mental drain. So to re-engineer that and turn that bus around, it took 4 years.
Yeah. And I know from having gone through that myself, it isn't just the financial issues, but like you said, it's the mental drain on that. And it's embarrassing and it is humiliating. And it is, quite frankly, it was a very depressing time for me. And I have a degree in psychology and I was supposed to be able to deal with those things. And I can tell you, it was not fun to go through.
Yeah, and here's the punchline with that. I think success is a real bad teacher, right? And so you couldn't have convinced me that back then that was a good thing, right? And you probably agree because of what you just said. But in hindsight, I find myself monthly talking to students, sometimes weekly, sometimes daily, about something that came out of that can help them now. And so I scream to people on these podcasts and my own show, please, when you talk to people, find the people like yourself and myself that have gone through storms, economic and personal, so that you can now navigate those waters, not someone that started doing deals 3 years ago and had some success with the run-up. Be very careful with that.
I like what you just said. Success is a very bad teacher. I'm going to have to remember that little ditty there. And truly it is. As long as we're succeeding, there is so many things we have our blinders on that will come back and bite us at some day. Well, thank you for sharing that, Chris. I know it wasn't pleasant. Having been through it, I know I don't like to be reminded of it, but thank you for sharing that with us. So what are you putting your success as an investor and entrepreneur to work? How are you putting that to work to create universal well-being and abundance for all beings?
2 things. Great question. On the coaching side of things, because we're still doing deals every day, my son and son-in-law and I, on the coaching side of things, there's nothing until you do it. It's hard for people to fathom. There's nothing more successful than seeing someone achieve our purpose. Our purpose in our company. I shared some of the values, but our purpose is to help individuals and families create the life of their dreams. And we literally are doing that because it's not about the deal, as you know all too well. It's about all the other things that come about, the designing of the lifestyle, the time with family. We're very family oriented. And so when I see people say, look, I left my job, I can see my son now. This is Brian in Illinois, because I was on a plane for 17 years. Like, that's what I mean. The deal's great and he has some money, but it's creating the lifestyles. And then secondly, as a family, my wife and I, we have one purpose now and one mission, and that is to create experiences. Now, it's not about the money. It's about earning the money to do the things that money can't buy, create family experiences. So that's what we're doing on the broad front and the family front.
Well, excellent. Well, imagine that you have come to the end of your life, and as you lay on your deathbed, what do you look back on with your greatest sense of satisfaction and fulfillment?
It would have to be those same 2 things, but the priorities switched the way I set them. So creating family experiences, because you'll take those with you. Those are people don't forget those. Material things, garbage. Experiences, they'll live forever. So that's a biggie.
Well, Chris, it has truly been a pleasure having you on the show, and it was a delight getting to know you, not just as an entrepreneur, but also as a person. So thanks for being on the show, Chris.
You bet. Thanks for having me.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Seed Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.